You know that feeling, right? You're on vacation, you hit the slots, or maybe a lucky hand at the tables, and bam, you walk away with a nice win. It feels absolutely amazing. But what happens after the celebrating is over? Well, today we're going to dive into the often overlooked and surprisingly tricky world of taxes on gambling winnings. Okay, let's get right into it. You're holding a pile of chips or a winning ticket, and probably the last thing on your mind is the tax man. But here's the deal. That big win is considered income, and you better believe the IRS is interested. So how in the world do you handle it correctly? And look, this is really the bottom line. It's not optional. It's not something you can just kind of hope goes unnoticed. Why? Because for any significant win, the casinos have a record, they have your information, which means the IRS is going to have it too. So the first and most important rule is simple. You've got to report it. You know, a lot of this confusion pops up when people are on vacation. It feels like vacation money, right? Kind of separate from your real life, like it doesn't count. But in the eyes of the IRS, it's just plain old taxable income. And that can be a massive shock when tax season finally rolls around. So you might be asking, how does the IRS even know about my win in the first place? It's not like you call them up to brag, right? Well, it all starts with a very specific piece of paper, a form that makes that win totally official. And this is it, Form W2-G. The easiest way to think about it is like a W-2 from your job, but for gambling. The casino fills it out, they send one copy to you, and yep, you guessed it, one copy goes directly to the IRS. This little form is the official record that you received that income. So the second you hit it big, what should you do? Right there, in the moment? First, make sure you get that W-2G. Do not leave the casino without it. Second, and this is a pro move, ask them if they can withhold federal taxes right then and there. It's not always an option, but if they can, it's like prepaying your tax bill. If they can't, you need to mentally set aside a chunk of those winnings, because you will owe taxes on it later. Okay, now we're getting to the part that trips up almost everyone, your losses. I mean, it seems totally logical that if you win $1,000 but you lost $800 getting there, you should only have to worry about the $200 difference, right? Well, unfortunately, it is not that straightforward. This is the million-dollar question, isn't it? It's what most people just assume is the right way to do it. You just report the net amount what you walked away with in the end. But this is probably one of the biggest myths in gambling taxes. So take a look at how this really works. The myth is simple subtraction, but the reality is a two-step process, and they are completely different. You have to report the full amount of your winnings as income on your tax return. Then, on a totally separate part of your return, you can list your losses as a deduction. They are not a direct dollar-for-dollar offset before you report anything. And this right here is the crucial point. Let's make it super clear. Let's say you won $5,000 this year, but you also lost $4,000. You have to report the full $5,000 as income. Now, to get any tax benefit from your $4,000 in losses, you must itemize your deductions. Think about it. So many people just take the standard deduction. If that's you, you report the $5,000 win, but you get to deduct zero of your losses. That is a huge deal. All right, so to make sure you're totally prepared and don't get hit with a nasty surprise, let's just boil this all down into a clear, final playbook. These are the 4 essential rules to remember anytime you're feeling lucky. So here's your action plan. 1. For any big win, get that W-2G, no excuses. 2. Always, and I mean always, report those winnings as income. 3. Keep a detailed log of your losses, dates, amounts, where you were. You need proof. And 4, the golden rule. Remember that you can only deduct those losses if you itemize your deductions. So as you plan that next trip or a fun night out, you know enjoying the thrill of a lucky streak is all part of the experience. But now you know that a little bit of tax planning can be the difference between a fantastic memory and a major headache later on. So is your plan ready?